Welcome back to Labi Premium Concepts. On this channel, we share educational content ranging from mathematics to accounting. All right, so welcome back once again to our channel today. I see some of you guys joining the stream. You are welcome back. Let's do all to like the video, share it out, and then let others also join us in that case. So thank you for joining us today in our live session today. So we want to take in some 5 questions to take 5 minutes, to take in questions concerning business mathematics, concerning other courses that you read on our channel here, so that after the 5-minute questions, we will start right away with our class or our topic for today's discussion. So if you have any question, let me see in the comment section based on what we have started or what you have watched or what you have learned on this channel. If you have any question that bothers your mind, that you want understanding, that you want further clarification, you can put in the comment section so that we give you the blueprint, we give you the understanding that you need in order to actually understand those areas that you really want to ask. So if you have any question, can drop it in the comment section so that we take it from there. So I'm beginning to spy my comment section. If there is any question, we are just taking 5 minutes to actually have a question section. So if you have any question, can drop it in the comment section. Do also like the video as well and share. If you also have any topic that you want us to discuss on this channel at all, you can also put it in the comment section. So we'll read and then we'll take it from there. So that is what we are actually want you understand. So if you have any question, just drop it in the comment section, or a topic you want us to discuss on the channel, you can also drop that on the comment section so that we will take it from there. If there is no any other question to then, we'll begin right away. So just some few minutes, just waiting for you with your question. If you have any question, just drop it in the comment section so we take it from there. All right, it seems there are no questions for me to answer today. So we'll begin right away with our discussion on today's episode, right? So today we are looking at trade and cash discount. We are looking at trade and cash discount. So that is what we are looking at. Okay, so I see one question in here. Let me attend to it and then let's start right away. As someone is saying that I don't understand why gross earning doesn't involve draws. All right, so when we talk about gross earning, in simple terms, gross earning has to do with the summation of all incomes that is paid or that's attributable to a staff or an agent or an employee, right? So when we talk about gross earning, we are talking about the summation of all incomes that must be paid to a staff or an employee, right? But let's note that when it comes to gross earning too, we are summing up all what? Incomes. We are summing up all incentives. At the end of the day, it is awaiting for what? Deduction. So for us to know the net earning, that is where we subtract all deductions from the gross earning so that we get to know what our net earning at the end of the day. I believe you are getting what I'm trying to put across. So that is gross earning. So gross earning, if you're asked to find gross earning, then we want to sum up all the earnings or sum up all the incomes that must be paid to a staff or an employee within the organization, right? And one thing you also need to know here is that gross earning is basically earnings that is awaiting for deduction. So once all deductions is being subtracted from the gross earning, you get what we call our net earning. So if the question requires you to find gross earning without net earning, we don't subtract any deduction from or we don't subtract any expenses from the gross earning. Where you are required to find net earning, that is where you subtract your expenses from the gross earning to get your net earning. So that is generally what you need to understand when it comes to what gross earning. As a once, I hope I have answered your question. Okay, one in here. Julius saying that good afternoon. Okay, good afternoon. I hope you are doing well. Welcome back and thanks for joining us today in our live session. So please let's do all to share the video, like it as well. Today is your first time. Make sure to subscribe to the channel so that you stay tuned whilst we release other videos for you to actually appreciate in that line. Okay, so let's begin our today's section where we are looking at trade and cash discounts and things that we need to know when it comes to trade and cash discounts. So without further ado, let me share my board and let's start right away. So as you can see on the screen, we are looking at trade and cash discounts in our session today. So trade and cash discount, trade and cash discount. So when we talk about trade and cash discount, basically they are all incentives that we use in business to tease our customers to buy more, So in today's discussion, we want to actually discuss or start with or begin with trade discounts and later look at cash discounts in the discussion. So that's how today's class or today's section is structured. We are looking at trade discounts at the beginning piece, and then later in the discussion, we will look at cash discounts in that line. I hope that is clear. So let's begin with what we call a trade discount or a concept called trade discount. You and I know that in businesses, okay, to encourage sales, from your customers or your potential customers, you expect as a business to put in some strategy that will help you to earn more sales. And one of the ways to earn more sales is what we call giving what we call a trade discount. So generically, trade discount has to do with a percentage reduction in a general price of what? Of a good, right? Or a service. So you are talking about what? A reduction in the list price of a good or a service. That is a trade discount. A percentage reduction in the list price of a good or a service. I believe that is clear. So when it comes to trade discounts, we make use of what? Percentages as a way to apply it on the list price to get what? Our discount. So once the percentage is applied on the list price of that good, we get what we call the discount amount. We get what we call what? The discount amount. So trade discount is a way that we use to encourage sales, repeated buying from our customers so that at the end of the day, the business will make more sales and customers will be happy so far as business are also what? Happy in that line. So that is a trade discount. So as I said, trade discount is a percentage reduction in the list price of a good or a service. In this case, we call it what? A merchandise. We call it a merchandise. Okay. So as I said earlier on, the percentage that's been applied on the list price, we call that whatever you're going to get at the end of the day, we call that as what? Your discount amount. We call it what? The discount amount. All right. So that discount amount is the reduction in the list price of the good or the service. And later in our discussion today, we will look at the trade discount that has a relation with what? Goods, right? We look at trade discount that have a relation with what? Goods. That is what we want to understand in that line. I believe you can hear me loud and clear. So that is what we need to understand when it comes to what? Trade discounts. That is what we need to when it comes to trade discounts. All right. So now, let's start by looking at trade discount from this perspective. We said a trade discount is a percentage reduction in the list price of the good or a service. So let's say I have a list price of a good to be say, let's say a list price of, let's say, a commodity, to say $200. What is happening here? And I have the discount or the rate for the discount always given percentage as, let's say, 20%. And I'm asked to find the trade discount. And I'm asked to find the trade discount from this word information. So trade discount in simply terms, or we call the discount amount, is going to be the list price, okay, multiplied by the discount rate. The list price multiplied by the discount rate. the list price multiplied by the discount rate. So straight away here, we will say that the discount amount is going to be $200 multiplying what? 20%. And what are we getting? When you apply 20% on $200, then we are getting what? The difference should be, or that whatever you're going to get should be what? The discount amount. Should be the discount amount. So let's take note of that. So in my case, when we compute for this, you should be able to get a discount amount of what? 40. Someone can confirm that to me if that is possible. A discount of what? 40. So once you get that discount, that becomes what? The discount amount. So this amount that is off the list price, which is what? $200. So at the end of the day, the customer is going to pay what? The difference between the list price and the discount what? Amount. The customer is going to pay the difference between the list price and the discount amount. And that's going to give us the amount that the customer is going to pay at the end of the day, right? We call that as what? The net price. We call that as the net price. So net price is going to give us what? The list price minus the discount amount. The list price minus the discount amount. So in this case, we're going to get what? 200 minus what? 40. And we are getting the list price of what? Sorry, the net price of what? 160. So 160 becomes the net price of this commodity in particular case. So let's take note of that. So generically, that's how we compute for trade discount. So now we know a list price, we know a discount amount, we know the rate of what? The discount or the discount rate, and other things that we need to know. But when it comes to computation of trade discount, as we are discussing, it has actually two methods that we use to compute for trade discount. In trade discount, we have two methods. For our level, we have two methods. We have one called the discount method and the other called what? The complement method. We have the discount method and we have the complement method. We have the discount method and we have the complement method. So let's look at how this method comes in to help us to calculate discount amount or calculate trade discount for a customer in that line. So now, when it comes to the discount amount, let me create a board here. I'm going to use this to actually explain that. So when it comes to the discount amount, it's very simple. For us to get the discount method, for us to get our discount amount in using the discount method, so I'll call it as what? DM, as what? The discount method, right? So when it comes to the discount method, it's very simple. For us to get our discount amount should be equal to the list price multiplied by what? The discount rate. Remember, the list price and the discount rate is going to be given in a question. The list price and the discount rate is going to be given in the question. So all I want you to do for us to get our discount amount, it is the list price multiplied by the discount rate, and you get what? Your discount amount. So in the discount method, we are looking at two things. We are looking at the discount amount and the net price of the good or the service. We are looking at the discount amount and the net price of the good or a service. So once you know the discount amount, then for us to compute for our net price or the net amount, that should be equal to the list price minus what? The discount amount. The list price minus the discount amount. Right? The list price minus the discount amount. And that's going to fetch us what? Our net price. Right? So in a discount method, we are looking at the discount amount and the net price. I hope that is clear. But when it comes to the complement method, we are only looking at what? The net price of the commodity or the good. We are looking at the net price of the commodity or the good. So complement method. So when it comes to the complement method, okay, we are looking at what? The net price. So in simple terms, your discount rate is going to be given to you in a question, okay? So all I want to do is what we call find your complement what? Rate. Find your complement rate. Because the discount rate is going to be given in a question. And how do you find a complement rate? Complement rate is equal to 100 minus what? The discount what? Rate. 100 minus the discount rate. 100 minus the discount rate. So once you get the complement rate, you apply the complement rate on the list price of the good for us to get our net price, for us to get our net price. And this is how the two methods is actually used in the computation of what? Trade discount, or in the computation of what? Discount amount. I believe that is clear. So in this line, we will say that for us to get our net price and the complement method, net price should be equal to the list price, okay, multiplying the list price, multiplying what? The complement what? Rate. The list price multiplying the complement rate. And we are good to what? Go. The list price multiplying what? The complement rate. So once we get that, that becomes what? The net price. Because we said under complement method, we are looking at what? Just the net price of the good or the service. By discount method, we are looking at what? The discount amount and the net price. So under discount method, for us to compute for our discount amount is the list price multiplying what? The discount rate, and also you're also looking at the net price, which is also equal to what? The list price minus the discount amount. But when it comes to the complement method, for us to compute for our net price, we are also looking at the net price of the good or a service, right? And for us to do that, we need to compute for our complement rate. And how do you do that? You compute for our complement rate by subtracting the discount rate from 100. Whatever you're going to get, you apply that on the list price so that we get our net price. So that is how we find the net price and the complement method. And then when it comes to discount method, the discount amount, and this is how we also go about that. So let's note that list price is actually the initial price or the catalog price or the original price of the item that is awaiting for what? Deduction, right? So that is the list price for which there hasn't been any discount that has been what? Applied to it, right? So that is the list price or the catalog price or the initial price or the original what? Price. These are the alternative names that we can use to wait. We can use, in place of what? The other to mean the same or thing. I believe that is clear. So that's the difference between the complement method and the discount method. That's different between the complement method and the discount method. So when it comes to the use of what? This method, okay, it is actually the requirement of the question that will tell you. But in a situation where you are not given, you are not told of which method to use, you use the one that will help you to actually work out that situation in the best possible time so that you able to save time in that line. The examination condition, right? So where you are not given or you are not told of any method to use, you are obliged to go by using your own approach, whether the discount method or the complement method. Use any of them and then you get your answer. And that's going to be what? All for that. So let's take note of that. So that is what we need to understand when it comes to the issues about complement method and then the discount method. As we move along, if you have any question, drop it in the comment section and let's take it from there. So as we discuss, the discount amount is the list price, right? The list price, okay? The list price multiplied by the discount rate, and for our net price too is the list price minus the discount amount so that we get in that line. So that is what we need to understand from there. And then also, so let's take an example from here. Let's take an example from here. We are asked to compute the discount amount and the net price for $750 computer offered at 10% discount rate. So here you realize that I say we are asked to compute for discount amount. We are not giving any method to use, whether the complement method or the discount method. So here you decide the fastest way to actually solve this to get our answer. That is what we need to understand. That is what we need to do in that line. So here we'll have our solution down here. So we have that of the list price to be equal to what? $750 what? Dollars, okay? And we have that of our discount rate to be equal to what? 10%. To be equal to 10%. To be equal to 10%. So for us to get that of what? Because we are asked to compute for discount amount. And how do you compute for discount amount? When I'm using the complement method, so the discount method, it is simple. So here, you wouldn't actually state the method, okay? Since you know what you're doing, just apply to it and then work in that line. You are good to go, okay? So here, I would say that the discount amount should be equal to my list price multiplying what? My discount rate. So once I'm using this formula, then meaning that I'm using what? The discount method. I hope that is clear. So in that line, I will say that my discount amount should be equal to the list price is what? 7 what? 50. Okay. And then multiply by the discount rate of what? 10%. And what are we getting? And what are we getting? So in my case, I had a discount amount to be equal to what? $75. Somebody can confirm that for me. $75. So that becomes my discount what amount. That is what the question asked us to what find. Or was there any other thing for us to find? So you're asked to compute for the discount amount and the net price to show. So once we get the discount amount, we will say that to compute for the net price is going to give us what? In using the discount method, the net price should be equal to the list price minus what? The discount what amount. The list price minus the discount amount. So what are we getting? We know the list price is what? 50 minus the discount amount of what? 75. So when you take the difference between the two, what are we getting? Let me grab my calculator. So I had what? 675. So I had 675. So that becomes what? In dollars? 675. So actually, at the end of the day, this is what the customer is going to pay as what? The net price for the computer, right? Going to pay 675 as for the price because he was given a discount of 10%, right? So that is the net price, and this is the discount amount, which is what? $75 dollars. So let's take note of that. So this is where we are computing what? The discount amount and the net price using the complement method. How do you also compute using the same information for the complement method? So in the complement method approach to, it's very simple. You find your complement rate, you apply that on the list price of the good, right? So let's see from that end too. So using the complement method, I will say that for me to get, I'll first of all need to find my net price, okay, before I'll come back to the discount. I will say that my net price should be equal to the list price multiplying what? The complement what? Rate. The list price multiplying the complement rate. So how do I get my complement rate? We say the complement rate is equal to 100 minus what? The discount what? Rate. So I know the discount rate from this question was what? 10%, right? So 10%. So 100 minus what? Minus 10. Minus 10. And what are we getting? We are getting what? 90%. Okay? We are getting 90%. We are getting 90%. So once we get the 90%, we apply that on the list price. And let's see what we're going to get for the net price. So net price is going to give us what? 750 multiplying what? 90%. 750 multiplying 90%. And what are we getting? Let's compute for that and let's see. So we have 750 multiplying what? 90%. In my case, I had what? 675. So you realize that when you use that of what? The complement method to, we are getting the net price to be 675 as we are getting the discount method, right? So once you get a complement method of 675, you then subtract that from the list price, right? So that we get the discount what? Amount, for which is going to be what? 75 in that line. So let's take note of that. Let's take note. So that's how we compute for discount method and then the net price using the discount amount and the discount method and the complement method. Any question up to this stage? Any question? Because we are moving on to another issue in that line. All right, so let's see. Julius saying that, so do you choose which method? Let me take off this. So do you choose which method to use or you would be told? As I said, I think I explained. So with that If you're not given any method, you use your own method to actually work that in that line. I believe that is fine in that line. But where you are given a method to use, just follow that and work it in that line too. Then Opoku Enoch is saying that, please, for the complement method, is the 100 in percentage? Yes, the 100 is in percent. So you subtract the discount rate, right, which is what? In percentage from 100. So whatever you're going to get is going to be a percentage, and you apply that on the list price so that you get your net price at the end of the day. So let's take note of that. Michael is saying that, please, if you are using a particular method, do you have to state it? Fine, you can state it. You can also not state it, because the examiner will actually understand the method that you are using. So whether you state it or you don't state it, we are okay to actually go. All right, so that is fine. So let's continue. So that is the two issue approach that we need to understand. Let's take another question from here. Example 2. FM Enterprise sells a set of plastic plates at a list price of 150 per plate, right? They give a discount of 5% for purchases above what? 1,200. LPC restaurant made purchases of 2,400 worth of plates. Requirement here: what price did LPC pay per plate after the discount? And then what was the total discount amount? What was the total discount amount? What was the total discount amount? So how do you compute for this? So here we are asked to find what? The price that LPC pay per plate after. So we are just looking at what? Just the net price of one plate. Just the net price of one plate. That is what we want to understand. That's what we want to work it out here. I believe that is fine. So we know that the list price per plate is what? 150. And you're able to get a discount of 5% when you exceed a sale that is above what? 1,200. So the 1,200 serve as just a quota, serve as just what? A condition that once you exceed that, we give you what? 5% on any number of what? Plates that you bought at the end of the day. And remember, LPC restaurant made a purchase of what? 2,400. So in this case, LPC will actually qualify for a discount of 5% on the purchases of what? 2,400. And I believe that is clear. So here, the first requirement here is we are asked to find the price that LPC will pay per plate after the discount. That's one per plate. What are you going to get after the discount? That's what we were asked to find. So we are asked to find the net price per plate, right? So to find the net price per plate, here we know that, let me start from here, so I will descend in that line. Here we know that the list price per plate is equal to what? $150. So it's equal to 150. It's equal to $150, okay? And then the discount rate is equal to what? 5%. The discount rate is equal to what? 5%. And remember, we exceeded the quota of what? We exceed the quota of what? $1,200. So meaning that we'll get a 5% automatically on the purchase that we made for the previous what? 2,400. I believe that is clear. So here, since we are asked to find the net price per plate after the discount, is straight away we need to find the net price. Okay, so here you see that there wasn't any method that was actually given to us. So we go by the method that will help us to actually compute it. So I'm going to use a two approach to work it out in that line. So I will say that before I can find the net price per plate, I need to find my discount amount per plate. So discount amount per plate is going to be the list price per plate, okay, multiplying what? The discount rate. Multiplying the discount rate. So what are we getting here? The list price per plate is what? $150, okay, multiplying the discount rate of what? 5%. And what are we getting for that? So with my calculator, let's see, 150 multiplying. I had my discount amount to be equal to 7 point what? $5. I had my amount to be equal $7.5 as my discount amount. So once I get the discount amount, therefore I will say that my net price per plate is going to give me that of what? My list price minus what? My discount amount. So if I'm using this method, meaning that actually I'm using the discount what method. Looking at the approach I'm going, then I'm looking at what? The discount what method. Is that okay? So that's going to give us what? 150 minus what? Minus that of what? 7.5. So what are we getting as our net price? So we have 150 minus what? 7.5. So I had a total of what? 142.5. 142.5. So that becomes 142.50. So this becomes my list price per trail after the discount, right? So after that's what I get at the end of the day. So I we also asked you compute for what was the total discount amount here too, so that we can say that since we qualify for the discount, we'll say that the total discount amount should be equal to the total purchases that we made, should be equal to the total list price. Let's use that, multiplying what? The discount rate. Very simple. So in this case, we're going to get what? 2,400, okay, and then multiply by what? 5%. That is all. So what are we getting? With my case, when I multiplied 2,400 by 5%, I was getting 120. I had 120. So I had what? 120 what? Dollars. So that becomes 120 for the total discount amount at the end of the day. Someone might also decide that, okay, since I know the discount amount per trail to be 7.5, then I can find the total number of trails that you make that LPC actually purchased from FM Enterprise, okay, and then multiply that by the discount amount per trail so that I'll get the total discount. When you do that, you're going to get the same thing, okay? So if you want to go by that, it's also very simple. You tell us that we know that the total purchase, which is 2,400, so you tell us that total list price actually should be equal to the number of plates that was purchased multiplied by what? The list price per what? Plate. The list price per plate. I hope that is clear, because for us to get a total purchase of what? 2,400, it should be the number of what? Plates that we purchase multiplied by the list price per what? Plate. Is that okay? So we know the total purchase that we made was what? 2,400, okay? And then that of the number we don't know, so we represent that by say X, right? And then we multiply by the list price per plate, which is what? 150, which was 150 in that case. So here we want to find X, right? So we divide both sides by 150. We divide both sides by 150. And what are we getting? So in my case, I had 16 to be equal to X. Somebody can confirm that for me if that is actually true. So 2,400 divided by 150, I had 16. So once you get a 16, that becomes the total what? Purchase that we made for the period. Therefore, for us to determine that of our total discount amount, that should be equal to X being representing the number of plates that we purchase multiplied by the discount what? Amount. And what are we getting? What are we getting? So here we know the number of plates that we purchased was what? 16. And then multiply by the discount amount of what? 7.5. And what are we getting at the end of the day? With my case, when I multiply 16, you can confirm for me too. 16 multiplying 7.5, I had 120. You get the same thing as what? 120 as we're getting in that line. So 120. So 120 for the total what? So anywhere that you go, you're still going to get what? The same thing, actually. So let's take note of that. So here I was using what? The discount method. I was using the discount method. Please, let's do what to share the video and like it as well. Let's do what to share the video and like it as well. So here I was using what? The discount what? Method. Okay. If I want to go by using the complement method, I'll find my complement rate, right? Since we actually qualify for the discount, I'll find my complement rate by subtracting 5% from 100%. And the remaining is going to be what? 95%, okay? When I applied 95% on 2,400, I should be able to get my net purchase or my net purchase amount or my net purchases. Once I get that, I'll subtract that from the list price, which is a total of what 2,400. And I don't think I'm going to get the same as what the 120. That is the complement method approach. That is the complement method approach for the total. But when it comes to the individual plate, as per the requirement, the first requirement, here too, I'll do the same thing. 5% from 100 will fetch me what? 95%. When I apply that on 150, that's going to fetch me what? My net price or net purchase, right? And that's going to fetch my net purchase as per the requirement of the first one. That's going to be, you're going to get the same thing as what? The 142.5. You can try that to calculate and let's see if you actually not get that. You get the same thing actually as I'm saying. So that is the complement method in that line. So let's take note of that. But there are times where you being a buyer, you're not going to give only one discount rate to be given. At the end of the day, there are situations where your uh, your seller or the business want to encourage large volumes of sale from you, the customer, or want to encourage repeated buying. They may want to give you a series of what discounts that will help you to enjoy more so that you continuously patronize from the business. If that is the case, then the business is going to give what we call a series of for discounts. And how do we compute for a series of discounts that will be off the list price of the customer so that the net purchase is what's going to be paid or remitted by the customer? That's what we're going to look at in the next line. So the complement method, I think I've explained that. So straight up, subtract the discount rate from 100% to get the complement rate, and then multiply the complement rate by the list price, and you are good to go. So use this as a question to discuss on your own. I think we just discussed this using the complement method in the first question. So the same thing actually in that line. So let's move on. So this is what I was talking about, the series of four discounts. So let's move on straight away to calculate that. How do you compute for series of what discounts? So it's very simple. You'll be given a number of what discounts. You'll be given a number of discounts. First, when it comes to series of discounts, okay, this is what we need to do. For us to compute for our trade, this is what we need to do. First of all, compute for individual complement rate. Compute for individual complement rate. So let's use an example. Let's say we have 10%, 10%, right? Let's say we have 15%, okay, and let's say we have that of what 20%. We are giving 3 series of discounts for which you're going to enjoy these discounts on your purchases. Is that okay? So we are giving this. So we are asked to compete for the discounts I'm not going to grant to you or grant to you as you being what? A customer. Is that okay? So in this line, this is what we're going to do. We are going to compute for individual complement what? Method. Individual complement rate, sorry. You're going to compute for individual complement rate. Remember, these are discount rates. These are discount what? Rate. These are discount rates. So for us to get our complement rate for individual discount rate, what are you going to do? You subtract 10% from what? 100, right? You're going to subtract 10% from 100. So meaning that our complement rate for 10% is going to be what? 90%, right? That of 15% is going to give us what? 85%. And that of what? 20% is going to give us what? 80%. That's going to give us 80%. So once we compute for individual complement rate, we then find the product of individual complement rate. We then find the byproduct. I mean, we multiply this and we get what we call a single complement rate. We get what we call a single complement rate. So let's take note of that. We get a single complement rate. So therefore, our single complement rate should be equal to what? 90% multiplying what? 85% multiplying what? 80%. Right? And whatever you're going to get becomes the complement what? Rate. All right? So let's try that with this. So 90% can also be converted to decimal as what? 0.9. So here 0.85. Here 0.8. If you're not conversant with the decimal, use a percentage and get your answer in that line, okay? So in my case, I had a total of 61.2%, 61.2% as my single complement rate, 61.2%. So once you get the single complement rate, then for you to get your single discount rate, you subtract the single complement rate from 100% so that you get what? Your single discount rate. And this is how we compute for the net price and then the discount amount where we have what? A series of discounts for the customer to enjoy from the purchases that he or she made or will be likely to actually uh, buy from the business. Is that okay? So in this case, we'll say that for us to get our single discount rate, that should be equal to what? 100 minus what? Our single complement rate. And in this case, we're having 61.2%, right? So we have 100 minus 61.2%. And what are we getting? I don't know, we should be able to get, I think we should be able to get, is it 38 or 30? So 100 minus 61.2. I had 38.8, 38.8. So 38.8 what percent. So this becomes the single discount. So this is how we actually deal with series of what discounts. So first of all, where the discount rates are given, compute for individual discount rates. After that, multiply this, compute for individual complement rate, rather, where these discount rates are given. You compute for individual complement rates. After that, multiply these complement rates together so that you get what we call a single complement rate. So when you apply the single complement rate, it's like more like what we have been talking about. When you apply that on the list price, you get what? The net price, okay? And for you to get the discount amount to, you subtract the complement rate, the single complement rate from 100 so that you get what? Your single discount rate. And then you apply that single discount rate on the list price to, you also get what? Your discount amount. And you are good to go. So that's what we need to understand when it comes to series. So let's take an example to actually clarify this. So Mavis received a series of discounts of 10%, 15%, 20%. I think this is what we were using here. Oh, yeah. So I think we can even work out like this. Okay, let's take it like a full question. After purchasing goods worth 90,000 from Coco Trading Enterprise, what was her discount rate and how much did she pay? And how much did she pay? So yeah, we are not giving any method to actually, so we can go by any approach. So first of all, we said that where we have series of discounts, we need to compute for our individual what? Complementary. So we have discount rates here. We have 10%, we have 15%, and we have what? 20%. Okay, so our complement rate is going to give us what? Here is going to give us 90%, but we know that you subtract 10% from 100, right? 15 from 100, 20 from 100. So you have here to be what? 85%. And we also have here to be what? 80% as our complement rates. Okay, so therefore, for us to get our single complement rate, that should be equal to 90% multiplying 85%, multiplying what? 80%, multiplying 80%. And what are we getting? Multiplying 80%. What are we getting at the end of the day? We're going to get what? 61.2%. 61.2% in that line. So once you get 61.2%, that becomes your single complement rate. What are we asked to find? We are asked to find first what was her discount rate. So therefore, to find our discount rate as a single discount rate should give us what? 100 minus our single complement rate, right? And what are we getting? So we have 100 minus what? 61.2%. And you should be able to get what? 38.8%. 38.8%. So that becomes the discount rate for Mavis, right? So at the end of the day, we are asking us, the next requirement here is that how much did she pay? So here we are looking at the net price. Here we are looking at the net price. So the net price straight up is going to give us what? the list price multiplying what? The complement rate. So here, actually, I'm using the complement method. Actually, you can use the two method together, okay? Nobody will penalize you for doing that. You can also go by using one method, actually. Is that okay? So no problem with that. So here, our net price then is going to give us the list price of what? 90,000, and then multiply by the complement rate of what? 61.2%. And what are we getting at the end of the day? With my case, 90,000 multiplying what? 0.612. I had 55,080. I had 55,080. So I had 55,080. 55,080 as my net what? Price or net or the amount that Mavis will pay at the end of the day. I believe that is clear. Here, so for you to get your discount amount, then you tell us that discount amount, if we're asked to find that, that should be what? The list price minus what? The net purchase what? Net purchase or the net price, the net purchase amount or the net what? Price in that line, okay? So when you subtract that, you should be able to get that as your discount amount. I believe that is clear. If you want to go by the complement, the discount method, sorry, this is what you're going to do. You apply 38.8% on the 90,000, okay? Whatever you're going to get, you subtract that from, say, 90,000. That will give you your net price that Mavis will pay, sorry, that Mavis will pay at the end of the day. So this is how we actually use the two approach to work out in that line. And I believe that makes sense to you. Any question? Any question before we take on to the next line? So that's actually the series of discount that we have. So you can try this in that line too. A trader receives a series of discounts of 15%, 12%, and 9% from purchases of a merchandise whose list price is $450. How much did this trader pay for the merchandise if she met all the conditions necessary for the discount? If she met all the conditions, so mean that you qualify for everything as a discount, right? So how are you going to do that? So straight up, you tell us that we have various discount rates, which is given. So we have what? 15%, we have 12%, and we also have that of what? 9%. So for us to get our complement rate too, we follow the same logic. We subtract various discount rate from 100, right? So what are we getting? Here we have what? 85. So here you need to be sharp and smart to get these figures down. We also have here to what? 88. And we also have here to what? 91%. So once you compute for this, then you also look out for our single complement rate, for which is equal to what? The product of these individual complement rates, right? So we have 85%. Okay, let me write it all. 85%. We have 88%. We have what? 91%. And what are we asked to find? He's saying that how much did this trader pay for the merchant? That is actually the net price. So we are looking at the net price. Simple. We're looking at the net price. So what are we getting at the end of the day? 85% multiply 88% multiply 91%. What are we getting? So 0.85 multiplying 0.88 multiplying 0.91. If you're not conversant with the decimals, use a percentage and you are good to what? Go. So in my case, I had 68.07, two decimal places, I had 68.07%. 68.07%. So 68, or let me write all the three values, 68.068%. So since we are asked to find the amount that this trader will pay or paid for this merchandise, that becomes the net price. So net price is going to give us the list price multiplying what? The single complementary. So here we are actually using the complement method to compute for this. I believe that is clear. So in this line, we're going to have here to what? 450. All right, multiplying that with what? Our single complement rate as what? 68 0.068%. And what are we getting? So with my case, when I multiplied 0. When I multiply 68% 68.068% by 450, this is what I got. I had a figure of 306.31. 306.31. So I had 306.31. Somebody can confirm that in two decimal place. Let's see if that is true. If that is true, let's see if that is true. So that is what I got. So this the amount that the trader will pay after a discount of this series of discounts. And I believe that is clear. So that is what we need to understand when it comes to trade discount in where it is given in series, where it's given in series of what discount. So let's take note of that. Any question before we move on to the next line? Any question? Okay, that is fine. So somebody's saying that. So that is Julius saying that what if you don't exceed the quota, but you just make 1,200? That was the first question that we saw there. I think the second question, meaning that you don't get any discount. So discount is what? Zero. The discount is zero because once you exceed that, that's where you get a discount on your purchases that you made, right? But once you don't exceed that, you don't get a discount. Or depending on the condition of the question, you don't get a discount. All right. So let's take note of that. Any question? All right. So that is what we need to understand when it comes to trade discount. So that is trade discount actually. So let's zoom straight away to discuss cash discount. Cash discount. So as we said about trade discount is actually the reduction in the list price of a good or a service. In general terms, is a reduction in the list price of a good or a service or of a merchandise. I believe that is clear. Right. So when it comes to cash discount too, as we have discussed earlier, cash discount is also a way that we actually give a discount to a customer. But when it comes to a cash discount, it is given, the motive here is that it's given to encourage what we call prompt what payment or to encourage early payment. It is given to encourage early payment or prompt payment. Payment on time. That is how we give what? That's the reason why we give a cash discount. It is given to encourage prompt payment or early what? Payment. So that is what? A cash discount. So when it comes to a cash discount, there are instances where if you've been a customer, we actually sold. That is where cash discount comes in, where the business may sales to you on credit and expect that you pay it at a later time, right? For the business to encourage you to pay on time, they will give you a discount on the sale that they made to you, right? And at times, if you fail not to pay that amount on time, the business has two options to go, whether it will take out its full amount from you, right? Or will apply additional what charges. We call that as what? An interest. So where a business or where a customer failed to make payment on time, the business might actually what? Instill the charges as part of the total amount that that customer owns to the business. And when it comes to that, then you're going to pay penalties for that. That becomes a penalty. So actually the business use an interest together with its amount that is being owned to eight customers to actually collect a debt, or we just actually take out what the amount that the customer actually owes, right? So that is actually the cash discount that we need to what, understand. It's given to encourage what prompt or early what payment. I hope that is clear. So in that line, as I said, interest are actually charged or to discourage what late what payment. But remember, when it comes to these interest charges, okay, when it comes to these sales related issues, before there should be any sales, right, between two parties, there should be an agreement, right, where both parties actually will come to an agreement that, okay, I have understood what you are saying, I've gotten what you are saying. So let's have some document that will bind us in terms of our sales and in terms of making payment from the customer. So at any point in time, there is this agreement that's been, instituted between these two parties. We call this agreement as what? The terms of payment, or simply the terms. So terms of payment, we are saying that some businesses use both cash discounts and interest charges, whilst others use only cash discounts or interest charges to manage their transaction. Whichever will be used, it has to be agreed upon by both the buyer and the seller. That has to be agreed by both the buyer and the seller. And whatever is agreed or stipulated is referred to as the terms, or simply what? The terms. So the terms actually will guide the actions of the two parties when it comes to what? These what? Sales, or when it comes to this transaction that succeeds between the buyer and then the seller. So at any time any of these parties fall short within these terms, then penalties will be applied. And most instances, or in most cases, these penalties are always at times coming from, majority of these always coming from what? The customer. Most of the time they fail not to pay on time, and as well, penalties for additional charge is going to be instituted on their sales that the business made to them on credit for terms. So that's what we need to understand when it comes to cash discounts. So in certain instances, as I said, for us to understand the cash discount better, they are going to be given a terms. And these are the terms look like. At times, these are the terms look like. They will state that, let's say we have something like this. Let's say 2/10. Let's say 5/ let's say 20. What's the meaning of these? Are the terms that actually is being agreed upon by the buyer and then the seller. The 2-year means what? You get 2% of discount within, when you're able to pay within what? 10 days. When you're able to pay within what? 10 days. 5-year means I get 5% discount when you're able to pay within what? 20 days. There's a meaning. And also have N, let's say 40, meaning that you get N percentage of what? Discount within 40. That's probably, we call that as what? The net. That's the time you must what? Make your final payment. So when you see N40, N of any number, then we are talking about the due date that you must supposed to what? Make payment. So you make payment within that what? Date. Okay. So that is the term that you must see going forward. You will see. Going forward, you will see. But hey, let's get this too. There are times where, let's say, you being the customer, you most of the times, or in other situations, you order your items overseas, right? That may actually get you into, let's say, by air or by ship, that's by sea, or any other means that actually the relation between the buyer and the seller is actually, in terms of distance, is very long. So let's say your order most of the times occurred overseas or towards air. So when it happens like that, what is happening here? There are times where once you order the item will get to your end, right? But once it gets to your end, it is by means of, let's say, by flight or by sea, that's through shipment, or by land through, let's say, vehicle or any other mode of what conveying the goods to your end. All right. So I don't know, once you get the item at your end, your seller or the one who sold the item to you will also send, in addition to you receiving your item, will also send a document called an invoice. And what is this invoice talking about? The invoice is actually a document that spells out all the items that necessary for the arrangement between you and that of what? The buyer. By that way, I mean it stipulates what? The amount you're supposed to pay in terms of cost per item, right? In terms of the amount you're supposed to pay, in terms of let's say the cost incurred in moving the item to your end, we call that as flight cost, right? Packaging cost, handling, those issues are always found on the invoice. And also as well, the terms of payment is also found on what? That invoice. Okay. So once you receive your item, you also receive together, after that you have received the item, you also receive together an invoice, which actually houses the terms of the payment, the price per unit of the item, the cost that you pay, the total cost of the item, which include the initial cost of the item that you purchase, any packaging cost, and any flight cost, whether it's by air, by land, or overseas, or by sea. I mean, to shipment. Those invoice will houses these what information actually, or those information will be found on the invoice. Okay, so once you get that, there are times where, fine, you have received the item, you have gotten to know the time you should make what payment, all right, and discount policy has been given on that invoice. Okay, so for us to calculate for your discount that you're going to receive at the end of the day based on the invoice amount, we need to do a bit of what calculations for us to know that this is actually the item that you made what, or you purchased from the buyer, or you purchased from the business. Is that okay? So discount, what I'm trying to say here is that discount should always be applied on the item that you bought actually, right? The discount, the cash discount should be actually applied on the item that you bought, not any other cost that will be added to it. Because remember, the invoice amount that you see as total cost comprises of the initial cost of the item that you purchased, right? Plus any handling and packaging cost, and plus other flight charges or flight cost. Okay, so we can actually calculate the discount, or we can apply the discount rate on the total cost of the invoice amount. Okay, we can't do that. That is very wrong. For us to calculate the discount for you, it should be applied on the item that you bought. We are interested in the item that you bought. And how do you get that? So now let's go through this simple calculation so that we get this done. So this is what I was saying, that usually in business, after delivering the merchandise, the seller issues or send a document called an invoice requesting payment. Okay, this invoice lists each item per unit cost, including packaging and flight, and the total cost, right? And the invoice also states the terms of what payment, as you can see here. So now, whatever you're going to pay at the end of the day is what we call what the remittance. So the amount the buyer pays is called the remittance. So let's see how we compute for the remittance when discount also comes in that line. That's what we want to understand. And let me use this space, right? So as I said, the invoice amount, the invoice amount, the invoice amount, the invoice amount include a whole lot of what things in terms of cost, include a whole lot of things in terms of cost. But our discount or our cash discount should be applied on the actual item that you purchase or you bought from the business or from your buyer, from your seller, sorry. Okay, that's why we need to apply the cash discount on it and not the invoice for amount. And how do we get that? We get that by saying that we need to know the net purchase amount. That will help us to know the actual price of what the item. So the invoice amount actually includes the purchase amount. Let me use initials, okay, so that we speed up. Include the purchase amount plus packaging cost, packaging and handling, plus packaging and handling, plus packaging and handling cost, okay, plus packaging and handling cost, plus other allowances or plus other cost. Let me say plus other cost. Okay, plus other costs. But what are some of the instances where, let's say, once you receive your item, there were some of the goods that you weren't okay with it. There were some of the items that you weren't satisfied with it, and then you return that to the buyer. You return that to the seller. Why am I using saying buyer then? And return that to what? The seller. What is happening here? What is happening here? So in a situation where you are not okay or you're not satisfied with some of the goods that was delivered to you as you being the buyer, remember, once you return that to the seller, remember that cost of you return that item is also part of the invoice amount, right? So we can actually compute for the initial purchase amount or the initial amount that the actual cost of the item that we purchase in terms of its cost. We can't compute that without taking that returns from it. So what I'm trying to say here, when there is any returns, you subtract that returns from the invoice amount, because that is also part of what the invoice amount. before the returns was actually took place. So you must subtract that returns. If you are not satisfied, you're okay with it, and you are returning some of the goods, you must subtract that returns from the invoice amount, so that you also take in other issues, so that we get to know our net purchase what amount. So this how actually the invoice amount is actually derived. It includes the original purchase amount of the item plus packaging and handling costs and other what plus other costs. So I call like that. So now for us to get our purchase amount, what are we going to do here? It's very simple. We make that the subject. Okay. So we say that the net purchase amount, or let me use initials. Okay. So I remove the net purchase amount should be equal to the invoice amount, okay? The invoice amount minus. So now you see what we are doing here. We want to make this a salary, so we want to subtract all these items from it. So the invoice amount minus packaging and handling, I'm using initials, okay? Minus. So if there was any returns to, you must subtract the returns, so that we get to know the actual item that you bought and the cost that is attributable to that item. I believe that is clear. So the invoice amount minus the purchase and handling cost amount minus any returns. Okay, right? Minus what? So the packaging and handling cost, most of the times we call that as what? Flight. Because form part of the move, and the flight cost also form part of it. I mean, the cost we incurred in transporting the item to the seller's place. We most of the time include them in the packaging and handling cost. It's part of it. I mean, the shipment cost, right? So minus that and minus other costs, other costs. All right. So once you get this, that becomes the net purchase amount. So it is this amount that we're going to apply the cash discount. Is this amount going to apply the what? Cash discount? And I believe that is clear. So here, once we get our net purchase amount, then we will say that our cash discount amount, should be equal to the net purchase amount, okay, multiplying what? The discount rate. Because we said for us to calculate the discount, it should be applied on the cost of the item that you purchased or you bought, and not any other cost. Okay, so we apply the discount rate on the net purchase amount. And what are we getting? That becomes what? Our cash discount amount. That becomes our cash discount amount. So once we get that, that is fine. Once we get that is fine. So once we get that, then we also need to know the amount that we are paying after the discount, because we said cash discount is given to encourage what? Prompt payment. And for us to do that, we need to know the amount we're going to pay. We call that as what? The cost of what? Merchandise, or cost of merchandise, or cost of the goods. Cost of merchandise or cost of the goods. And to compute for cost of merchandise is equal to your net purchase amount minus what? The cash discount amount that we computed. So when you subtract the cash discount amount from the net purchase amount, we get the amount you're going to pay on the actual item that you purchase, right? On the actual item that you purchase. So that becomes your cost of merchandise, okay? So once you get our cost of merchandise, then what will be the total amount you're going to pay to the buyer? Remember, once you get the cost of merchandise, the item itself wouldn't actually carry itself back to your business. No, it must pass through a platform to get your end, whether it's through a flight, that's by air, whether by seas or through land. So that cost you must also add to, so that you pay for it. Is that okay? We call that as what? The shipment what? Cost. So in this discussion, we call it as what? Flight what? Cost, or shipment cost in that line. So once we add the shipment cost to the actual cost that you're paying on the item that you bought, together we call that as what? Remittant. So remittant should be equal to the cost of merchandise plus what? Flight. Plus flight. And we used if any. So if you have flight cost, you add, because there is a situation where you may buy the item for which you actually carry the item yourself, right? So that one, there wouldn't be any flight cost. So we use if any. If actually it exists, you add that one to it. So the flight cost that you subtract from here, right, from the invoice amount, you add it back to the remittant, so that you get to know the total amount that you are paying at the end of the day. And I believe that is clear. So this is what we need to understand when it comes to the remittance issue, when it comes to the cash discount and other related issue. Any question up to this stage? Any question? If you have any question, you can bring it on board. Any question? Julius was saying that I didn't get how to use the discount method for the series of discounts. I mean, for the series of discount method, as I said, for you to compute for the discount method is very simple. Once you get your single complement rate, all right, for you to use the discount method, subtract the single complement rate from 100. Whatever you're going to get becomes your single discount rate, okay? And you apply that on the list price of the item so that you get the net purchase or the net price of the item, right? So once you apply the discount rate on the list price, you get what we call the discount amount, rather. Sorry, you get a discount amount. So once you get a discount amount, you subtract that discount amount from the list price so that you get the net purchase amount or the net price of the good. This is how we use the discount method to actually work out in a series of discounts. So all that you need to know here is that first compute for your single complement rate by finding individual complement rate from the series of discount rates, and then finding the product of these complement rates so that you get your single complement rate. You subtract that from 100 for you to get your single discount rate, okay? And you apply the discount rate on the list price so that you get your discount amount. And for you to get your net price, in the case of discount method, you subtract the discount amount from the list price so that you get your net price. I believe that is clear. Right. So that is what I can share my thoughts on in that line. Any other question? All right. So if there's no any other question, I'll wish to end here for today. Okay. So in our subsequent meeting, we'll take a caution on the cash discount by factoring in the issue about remittance, the invoice amount, and those related issues so that we'll build up in that line. That's going to be next week, same time, 4 p.m. on this channel, or probably it might be along this week, right? Looking at the nature and how we need to actually speed up for us to have our, number of questions to be solved so that we will excel in the exams. Will come your way probably in the this week, or if that is not possible, then probably that's going to be our next week in our next meeting, 4 p.m. Sunday each every week on this channel, so that we'll take in questions and then discuss other issues that will end with trade and cash discounts. Any other question? Any other question? Any other question? So if there's no question, then thank you so much for joining us today on our live session today. So please, if this is your first time on this channel, please do all to subscribe to the channel, like, and then share. So I'll see you in the next section where we take in questions on the cash discount and discuss other issues. Thank you for joining in. Bye-bye. Hello guys, you are welcome back to Library Premium Concept. On this channel, we share educational content ranging from mathematics to accounting.